Okay. Well, I think with a bit of technology we're on, which is clearly nothing to do with any of the three of us Luddites. Welcome everybody to our webinar this morning, Bubble and Speak, which is really giving us a bit of focus on upcoming tax year end and how we get some benefits from that and make the most of it. I think it's key that we have a strategy there. As always, we're joined by my two colleagues here, Mike Ball and Alex Reynolds, who are going to provide us with some wonderful insights, knowledge and experience. I did have to question myself when we sort of look at these webinars and podcasts and you see people on social media and you've got ex-sport stars and there's fun and there's games, and I find myself doing webinars on tax. It does really make me feel like I've missed my opportunity, but nonetheless, we're going to make it as enjoyable and exciting and informative as we possibly can for everybody. So, as we approach this, I do want to remind everybody that we have the opportunity for 20 free consultations for the first 20 people that email at consultation@whitelabelresources.co.uk. Don't worry about writing that email address down because we're going to get that circulated on the email. But I think the theme, as we sort of chat about putting this together, what's really interesting is, as always, it's the individual circumstances that are most important. So today we're going to try and give some broad things, maybe a little bit of scenario. However, I'll really ask people that they engage either with us or your own advisors and take some of these thoughts and ideas and really look at how you can apply them to maximise your personal position. Okay, so part of the general tax planning and focus is how we maximise both our commercial strategies and our personal piece, and how we align them with our own personal wealth. I guess, Mike, from a business point of view, your view is always get ahead of how you're going to structure yourself in terms of maximising your own personal tax position.
Yeah, I think, look, you've always got the personal position and a balance and trade-off with a corporate position. We have very few clients now that are sort of self-employed or partnerships, unless they have to be in professional services sector, that sort of thing. And we spend a lot of time looking at corporate structures and balancing out the dichotomy between income tax and corporate tax, and making sure that we set people up in terms of structure for future growth, future earnings, and obviously minimising tax liabilities along the way.
Yeah, and I guess that's the same sort of thing as you say, where there are individuals and partnerships and what have you. The principles are the same thing. Get that strategy right now.
Yeah, correct. And they're like once you put it all set up properly, you can use all your allowances across that you need to make sure that without any tax planning, you're just doing the easy stuff first.
Yeah. Well, I think one of the things, and for clarity for our guests here today, we will be there's all the usual culprits of what you can do. Make sure you've got your mileages in, you claim some money against the house. We're not going to talk about too much of that detail, but we are going to make sure everybody's got a digital handout effectively to remind everybody of where there are all those allowances and how we get to them. So don't stress too much about missing out on those guys. But as we do that, we want to really build on maximising things for our clients and how we get everybody in the right place. And my view is that probably starts with knowing what the right place is that you're at, which is an obvious housekeeping issue. But sometimes as we go into the end of this tax year, are we really sure that we know what we're trying to say, we know what our exposure is, and that housekeeping as individuals, Alex, and also as businesses has been quite key.
I suppose you ask that question in an interesting time of year when you're doing last minute tax returns and you give somebody a tax liability that they're not expecting.
Yeah.
And it's the same with the corporates as well. If we're doing all those kind of things, you can plan better, you can use those allowances and know that we're using them properly, and make that the more strategic structures that we do a lot easier to implement because we've got up-to-date figures and we know where we are from a business and a personal as well.
And I think that for me is one of the biggest reasons we're having a chat today is think I'm probably quite guilty of being one of those offenders who doesn't get things.
No comment.
We'll leave that one to us. And that's the problem is you do tend to think a bit more about what I need to do to get my tax return in, and actually that's really the wrong way around. It's so obvious, but now's the time to make sure we've actually got it sorted, and we don't always necessarily give enough time to think about, well, actually, do I know today on the tail end of January what my position is most likely to be on the 5th of April?
I think as well, I think accountants historically, and my view on looking backwards and forwards, accountants historically think that they've added value by spending a lot of time looking at numbers and systems, that sort of thing. I think when we go and talk to clients, that's got to be the base, right? That's got to be the day one start that's where you start adding value. So you've got to have the systems in. If you don't measure, you don't. If you don't manage, you can't measure. You can't measure, you don't manage. So you've got to know what those results are, so you can look forward and plan, and you can make huge headway into your growth strategy, your cash management, your tax planning, by really knowing what you're doing. But it should be given. It should be where people like us are adding value.
Yeah,
we can help put things in. We can structure things, but let's make it how we start the day rather than end the day.
Yeah, and I think that again, the taxes is what we've got to pay as a result of how successful we've been. So it has to run completely aligned with building a strategy for growth and for opportunity for customers as well. And I guess what you say, again, back to that point that will be in the handouts and the digital information, is they're all the reliefs that are given.
Yeah,
that should just be part of the tapestry of our everyday piece. Yeah. Okay. Cool. So, Mike, I know when we were talking earlier on, you mentioned particular customer that you've been dealing with. It might just be useful just to give a little bit of a snippet of how the alignment of tax risk and tax planning led into a bit of a strategic reshaping of them.
So yeah, we started working with a client a couple of years ago that worked in the sort of leisure and sort of tourism market. And when we went over to them, I thought it was a small business. I didn't know what sort of money they were making. It turned out that they were self-employed, making significant profits.
Right.
And obviously, as a sole trader partnership, you're paying tax on your entire income.
Yeah.
You don't get to sit as a lower tax rate in a corporate and then get taxed on money you take out. And they just wanted some advice as to certain accounting system, how they're structured. Without going into detail, we incorporated them. Huge reliefs on incorporation. Alex, you can detail on that. I'm sure we can put some notes out.
Yeah, so if anyone's got any insomnia, I'm sure I could.
You could
we'll stop in there. But
you can have that as your free consultation.
But there are significant reliefs on incorporation.
Yeah.
If you've been running a trading business to take advantage of, corporation tax rates are lower. So we quickly got that client into a position where we've incorporated, we've taken the tax reliefs. We also implemented systems internally. Again, that's what we've just spoken about. 2 years later, that client's come to us and said, I want to change not necessarily change the strategy, but add to it and start sort of owning these assets that he works on. And we've got to position, because of the structuring 2 years ago, where his taxes have been halved. He's acquired an asset. That asset, because of what he's done, has increased his wealth fivefold.
Right.
And we're on to the next piece now, which I'm sure we can go into later on.
Yeah, absolutely.
It's to the next bits.
So that's interesting. So as well as, and I will keep reiterating, because we do get fixated on it, but we should not forget about the allowances and reliefs that we can all put into our tax position. But that's more, I see that as more collation of administration, but it's important. But actually what we're saying is there's some either type of restructuring, and even if they're already a corporate, there's things that can be done to do that. So that could still give immediate wins as well as long-term.
Yeah. So for example, it's not, and it relates to that client as well. It's not just about partnership to a limited company. There'll be loads of people listening that have already got a corporate structure, but how many family members are involved? There's opportunity to spread the ownership across the family. That obviously allows you to spread the income split and spread the tax exposure like that perfectly legitimately.
Yeah.
We've got clients, similar client where we've sold part of the business from parents to children that work in the business. You know, these things don't need to be gifted. Again, there's tax benefits of that. But yeah, looking at it, we don't go into to look at people's tax position. We go in to look at their sort of life and business strategy.
And that's then the fallout of
and build a structure around it.
Yeah. And I think that for me is something that, you know, as a business owner, and you go through the phases and the stages. What I tend to think is, I just wish I knew that 5 years ago and 10 years ago, and actually there's by doing it, there's some immediate wins as well as, you know, really building that opportunity as you grow.
I'd also flip that on the other side from an advisor point of view. Sometimes we say, oh, wish I'd known that 5 years ago because I could have helped you. And that's again, with people engaging with us now, taking advantage of those consultations, you know, we might be able to pick up, or might not be able to pick up on something that actually the client wasn't aware of, that actually we found out now rather than in 5 years time when it's too late to plan for that, like either assets in the wrong
Interestingly,
place
we were talking in the agricultural sector recently, and that's obviously for lots of reasons, you know, really out there. And we were talking to somebody who said, I was really surprised that my advisor said, if you'd have told me how much money you were making, I might have recommended something a year or two ago. And that for me is well, it's the exact opposite of what you're saying, and how we like to be is actually, no, you know, you should be advising me, you know, what does it look like going forward? So there's some earlier wins and there's some longer term strategy. Alex, we've had a question come in. Let me just read this one for you. So someone's asking, I have 2 rental properties which I've owned for around 5 years. One has increased in value, however, the other has decreased. So in terms of capital gains, firstly, can I offset the value one against gain of the other? And if so, would I need to dispose of them both in the same financial year, or is it possible to carry forward the capital gains? This person's a standard rate taxpayer.
Right. Okay. So yes, no. If you sell a property and you make a loss on that property, if you can't offset that against any other income. You've got to offset those losses against future capital losses. So if in this circumstance you've probably got it's probably 2 questions in one. One, if you sell them both in the same tax year, you can offset a loss against the profit on the other property. If you sold the one you're going to make a loss on first, you could carry that loss forward to the next tax year and offset it against profit in the future.
I'm guessing the advice is, because that's come through anonymously, is get on an email consultation and have a little bit of chat in a bit more detail.
As we always say, you can always answer a quick question, but you need to get the detail to give the proper advice.
Can I just say, stepping out of the detail, why do you own them personally?
Yeah.
Might be because in a company we'll have to sell to a company and there'd be stamp duty. Why aren't they in for example, a limited liability partnership? Incorporate an LLP and there are tax relief and you know, stamp duty can be avoided and that sort of thing,
which is great,
and you can get mortgage relief on your interest. So good answer, but I'd also be challenging.
Fix the answer and then look at the longer term strategy.
What's it? You know, you're looking at when you sell the properties, what you're doing with the money, what's the most tax efficient way to put, you know, you go on to the next stage as well.
And I think that loops into where the theme of what we're discussing today is going, is that we can give you all the vanilla piece, that's brilliant, and we must make sure we've maximised all of those pieces, but let's not get caught up in missing the opportunity that there's that way of looking a bit more broader here and a bit further, and we shouldn't be afraid to challenge ourselves, get involved in some of these strategic pieces, and all of a sudden there's so much more. And I guess depending on this individual's own personal agenda or other people's, is then you can say, well, actually I do fancy doing a crack at expanding this, growing this, and the routes to it are probably a little bit more available than we might think when we're used to being advising just on making sure we get the extra couple of pence on a mileage claim.
So you know, whatever why you're selling, do you need the money? Could we leverage it? You know, buy another one, but you know that one's made a loss. I just thought I'd cut my losses now. Well, actually, can we get that money we need by leveraging it and talking to our finance guys? You know,
strategic.
Exactly.
Yeah.
Might then do the next stage for the different
Yeah.
structure, maybe into a company, for
Okay.
example. So.
Cool. Old school pensions. A lot of noise around pensions, but it does feature in tax positions, both now and going forward, individually and personally.
Yeah.
Alex, where are we at?
Pensions.
Mm-hmm.
So
Still worth doing?
most definitely. So from a so there's two ways we look at this. One is from you've got a corporate structure, your limited company can make pension contributions on your behalf.
Yeah.
From a personal point of view, if you're on salary, for example, you can again make personal contributions, which you can get tax relief on from a personal point of view. There's a perfect time of year to start thinking about pensions because we're coming to the end of the tax year. In tax, higher rate of corporation tax is 25%. So if you're a limited company, you can make up to £40,000 worth of contributions for you.
Yeah.
It's 25% tax relief on that. And we do quite a lot of pension funds stuff.
Yeah.
Well,
Yes. Yeah. And then I guess if you're doing that, you can use there's the opportunities commercially to use that.
I think Mark's been working on some interesting cases recently with commercial properties and pension schemes and.
Well, you have to be careful now, because obviously, like, pension schemes falling into inheritance tax pot, but there's things to mitigate that. But yeah, no, quick example. We've got a client that makes they've got a commercial property in a corporate structure, a limited company, trading company. It's worth about £500,000. They'd wanted to boost the pension pot. Well, why not? Why not? I mean, it's all a bit circular. Why not put your commercial property into the pension pot, wipes out the corporation tax and make profits for the year? But also, if that goes into a SAS rather than SIP, that SAS can lend money back to the company for, as long as it ticks the boxes, the rules, it can lend money back to the capital, that sort of thing, to the tune of about 50%. So, that client, if we go through that structure, which we are, will save about £125,000 corporation tax. It can borrow and lend, back to the company £250,000.
Right.
Was that 253.75? So that £500,000 is strictly cost them 175,000 to get £500,000 in the pension scheme.
Again, that follows that theme. Let's not get too narrow about the paying of tax, because actually, by our strategic planning and structuring, it's going to help us with our tax burden, but it's also open up all sorts of opportunities that sometimes you just don't realise are there.
Yeah, and also interested with that client, the money that'll be lent back gives them better cash flow and then allows them to do a lot more in the business.
Extra bit of security, really. Okay, brilliant. So it is worth just bearing in mind, and with the excitement to talk about tax, it's always exciting to talk about capital allowances as well. That's always good fun. The assumption is made that from a commercial point of view, our customers are looking after themselves and being advised well on capital allowances. Not lots of changes, but opportunities still.
No, so again, we're coming to them. If you see NDB financial year is in line with a tax year, looking at acquiring assets to lessen your tax burden. When people look at replacing vans and stuff like that. I think in our previous webinar we talked about the changes in trucks. Again, a lot of people looking at that coming up to end of March as well. People still get the allowances. Lots of changes in the tax year. So not a lot of change on the capital allowances. I think that's about the biggest one.
Okay. So if we take kind of the key areas we're talking about, and repeating, very individual. We've got some stuff coming out. What we're trying to do as business owners is align the success of our business with our personal wealth. And that's ultimately where we've got to get to. And what I'm hearing is we've got to make sure we keep planning. There's some stuff that we can do now, but we've got to still keep planning. Just like you were talking about a particular client that you've been dealing with earlier on. I guess the next stage of where you got to, once you explain, well, actually, there's some immediate and short-term tax planning you can do that strategically puts you in a safer and better place that led to a bit of growth. That's just therefore them pushing out the boring tax piece of it into a whole wealth creation for those individuals involved in that business.
I think, look, if you particularly in the SME sector, the business is an extension of you as an individual.
Yeah.
So, you know, all the taxes sort of blend into one, but to look at the big picture, you know, with that client, once we've got into corporate structure, we've got husband and wife, we've got three older children that work in the business. We're restructuring the way they take sort of remuneration and the cream of their earnings. We're protecting them by putting the right structure around them.
Yeah.
By protection as well, you know, look at things like, you know, is there a holding company in there? So that if there's some surplus wealth in Tradeco, we can start to sort of hide it up and protect that.
Yeah.
Going forward, if anything ever went wrong. And then it's about, you know, really managing your life costs and how much you take out of that business and how you structure that.
Yeah.
But also within that structure with him, you've got to look, his balance sheet's gone from him doing that deal and he's got planning. His balance sheet's gone from probably about £1 million to £6 million. So, you know, we've now got some exciting issues. We've got much more strength and tangible assets on which to leverage up, which we're doing with some of our colleagues who take some money out for them, you know, which we can do efficiently because we're incorporated in the right way. He can now replicate that strategy elsewhere, you know, turn the 6 into 12 or 18. But all of that, whilst you're managing tax or whilst you're managing accounting and monitoring, it's, you know, you're starting to sort of significant opportunities and it just mushrooms.
Yeah.
And that's where we're with him.
Yeah. Which is, if you think that came from someone who, well, I don't know my tax position, I don't know what I'm really, you know, and perhaps a little bit all over the place.
Yeah.
Back to that point about housekeeping, there's our good starting point. Well, let's understand what our worst case scenario is, and then let's look at that. And I think that was, we were talking about that engineering company, I think that was going back to the housekeeping.
Probably similar to start to where Mike was in terms of, you know, where tax liabilities were, you know, profit we're making. And yeah, the team have worked really hard, got them onto cloud software, got all the processes sorted. You know, we've got getting into a position where they can look at an invoice financing facility to deal with large corporates with on 90-day terms to get more cash in the business, help growth, help hire staff, and just keep improving. And then gives you the opportunity for yourself as a business owner to, you know, remunerate yourself in the most tax efficient way.
Yeah, and they all just they follow through, because the risk is if you haven't got clarity of your information and your data, whether that's you as an individual, I don't know exactly what my drawings have been or what my position is, or as a business, you've got nothing to play with. Then you can't really, you sort of build, it's that foundation of sand, isn't it? You're building on something that you're guessing at. And so clearly we've got two examples there. One was a good old housekeeping, right, let's get ourselves sorted, and now maximising the opportunity. Obviously the chaps you were talking about actually then use that to propel their growth, and I guess that's a growth they didn't realise was possible.
Strategically, you've got to start looking at business in that sense, which obviously is a lot easier when you're in a corporate structure than it is. But when you start looking at your business as a separate entity and a tangible asset, then there's so much more you can do with it. Right? It has value in itself. It has the ability to leverage debt. You know, if you can raise money and invest that, you'll always make more than it costs you. Yeah. So structure it right, and if you've got a good plan, then it's about executing, right? And all clients, all entrepreneurs tend to be able to execute. Otherwise, they won't be doing what they're doing. But if they've got the structure around them, and they've got the arms around the shoulders, you know, on the legals, on the finance, and the accounting, etc., then it's a strong opportunity. It's a strong place to be.
Yeah, absolutely. So I think there's a very clear message there for all of us. Let's know where we are. Let's get our understanding. There's some good stuff that we should expect as a given going into our tax returns and our benefits for the year. We are going to distribute them. We are going to make sure everyone's got all of them, so no one misses anything there. Please, I would urge you, the first 20 people that email through to consultation@whitelabelresources.co.uk will be able to ask for consultation at their expert of their choice. And please bear in mind that the gents are, they do take things personally, so there will be emotions running high. If Alex gets all the requests, you might get none. But please do make the most of that and look at how we will be able to then look at how you can understand your personal situation. And don't feel that you can't just book a consultation because you've got a question that you might think is very basic or very. That's what we're here for. There's absolutely every piece of support we can give you. So once more, I'd like to thank you very much for joining us. Please look out. We have some further webinars coming through. We are launching Entrepreneurs Exchange podcast over the coming weeks, which is going to include far more exciting information and topics than tax. Could there be anything more exciting? So do look out for that. We'd like to engage you with that. If I knew how to point it in the air or down as to where you like to subscribe, of course we would, but clearly too old to know how to do that in social media fashion. So thank you once more for your time. Very much look forward to you joining us again, and wish you all a very good day. Thank you. Bye.